You are 22 years old. You start a $48,000 marketing coordinator job on a Monday in September. There is another person starting the same job, same title, same floor, same morning. You will never meet. But in 28 years, one of you will have $890,000 more than the other. Path A, age 22. The HR portal is open on your screen. Benefits enrollment. The page has 11 fields. You do not understand most of them, but you read them. Employer match. The company will match 100% of your contribution up to 4% of salary. You do the math on a napkin beside your keyboard. 4% of $48,000 is $1,920. Free. Per year. You select 4%. There is a field for health insurance. 3 plans. The high-deductible plan costs $87 less per month, but has a $2,800 deductible. Below it, a checkbox, HSA contribution. You read the paragraph. Pre-tax dollars. You check the box. You set it to $50 per paycheck. You do not understand everything, but you read everything. It takes 40 minutes. Path B, age 22. The same HR portal is open on your screen. Same 11 fields. You glance at the page. The default selections are already highlighted. You figure HR set them that way for a reason. You click through. Employer match contribution, 0%. You did not see the field, or you saw it and thought you would come back to it later. You select the default health plan, the mid-tier, $174 per month, no HSA. You close the tab in 6 minutes. You are ready to start the actual job. Both of you walk to the same break room that afternoon. Both of you feel like adults. Path A, age 22. First Friday. Your first paycheck arrives as a direct deposit notification. $1,643.08. You expected $2,000. You open the pay stub. 6 deduction lines explain the gap. Taxes, health insurance, retirement, HSA. The missing money is not missing anymore. It has names. You stare at it. Then you understand. $48,000 divided by 24 pay periods is $2,000 gross. But gross is not yours. You learn this on a Friday afternoon. The number on the screen is not the number you were promised. But now you know why. Path B, age 22. First Friday. Your first paycheck arrives. $1,551.22. You also expected $2,000. You look at the number. You feel a small deflation. You do not open the pay stub. You do not know what FICA means. You assume this is what everyone gets. You put the phone in your pocket. The difference between you and the other person on this Friday is $91.86 per paycheck. It is invisible. It will not be invisible forever. Path A, age 24. You have a credit card. Balance, $1,140. The statement arrives. Minimum payment, $34. You open the interest rate page. 22.99% APR. You run the card math. The minimum payment keeps the balance alive for years. You pay extra this month, not because you are rich, but because you can read what interest is doing. You drive a 2016 Civic you bought for $11,400 cash from a private seller. Insurance, $94 per month because you shopped 3 quotes. Path B, age 24. You have a credit card. Balance, $3,200. The statement arrives. Minimum payment, $90. You pay $90. The app confirms it. You feel responsible. Path B, age 24. You need a car. The dealership turns the price into a monthly payment, and the monthly payment feels manageable. You sign. 72 months. 6 years of payments. When you make the last one, the car will be worth $11,400. You will have paid $30,168 for it. Path A, age 27. Your lease renewal arrives. Rent, $1,340, up from $1,290. You read the full document. Buried on page 3 are 2 small fees that change the real rent increase. The first page made it look minor. Page 3 tells the truth. You email the landlord. You negotiate the parking back to the original rate. You save $540 this year by reading page 3. Your net worth is approximately $67,000. You do not feel wealthy. You feel like someone who pays attention. Path B, age 27. Your lease renewal arrives. You see the new rent, $1,390, up $100. You sign it. You do not read page 3. The parking increase and utility fee bring your actual monthly cost to $1,450. You do not notice for 2 months. The fixed payments are already stacked before food, gas, or the phone bill. Car, card, apartment, insurance. The month is mostly assigned before you touch it. You stand at a grocery self-checkout. You tap your card. The screen flashes your remaining checking balance, $211. Payday is Thursday. It is Tuesday. You are not irresponsible. You are employed, punctual, and hardworking. You just cannot see where it goes. Path A, age 30. You get a new job. Salary, $67,000. The offer letter is 4 pages. You read all 4. On page 3, the offer letter explains RSU vesting. You do not understand every term, but you understand enough to ask one question in the signing meeting. Is the match cap still 4%, or did it move to 6%? It moved to 6%. You adjust your contribution that afternoon. Your net worth crosses $130,000, not from a windfall, from the absence of leakage. Path B, age 30. You get the same new job, same company, same offer letter, same 4 pages. You read page 1, the salary, $67,000. You feel good. You sign. You do not read the RSU paragraph. You do not ask about the match cap. You select the defaults on the new benefits portal. The 401k stays at 0%. Your net worth is approximately $14,000. Mostly the 401k from a previous employer who auto-enrolled you at 3%. You have $2,400 in credit card debt and 22 months left on the car loan. You work just as hard. You stay just as late. The gap is not effort. The gap is that every document in your life has a price you are paying without reading. 12 years in. Same title. Path A, age 34. You sit at another onboarding desk, another benefits portal. You read it the way you read a menu, scanning for what matters, skipping what does not. The RSU vesting schedule, the 401k match, the HSA contribution limit, the disability insurance rider. You ask one question. You adjust 2 fields. You close the tab in 12 minutes. Your net worth is $195,000. No inheritance. No side business. No crypto. Just the compound effect of understanding every document your life handed you. Path B, age 34. You sit at the same onboarding desk. Same portal. Same fields. Your phone buzzes. $419 auto debit. A different car now, same payment structure, same 72-month term. A notification below it, credit card balance $3,200. The number has not changed in 10 years. It is not the same $3,200. It is a new $3,200 that replaced the old one. You look at the benefits portal. 11 fields. You select the defaults. Not because you are lazy, because you are managing 6 recurring payments and a checking account that needs Thursday to arrive. Your net worth is $22,000. All of it in a 401k you were auto-enrolled into at 3% and never adjusted. The difference is not intelligence. It is not discipline. It is that they could afford to read. Their monthly obligations left enough margin, financial and cognitive, to spend 12 minutes understanding what the screen was offering. 12 years in. Same title. $173,000 apart. You cannot afford 12 minutes. Not because of time, because of bandwidth. Path A, age 40. Tuesday night. Your apartment, the same modest 1-bedroom you moved into at 32, upgraded once. A desk, a lamp, a laptop open to a net worth dashboard. The line goes up, not dramatically, steadily. $410,000. You close the laptop. You stand up. You are not rich. You are not free. But you have options. Options are not wealth. Options are the absence of obligation. Path B, age 40. Tuesday night. Your apartment, same tier as a decade ago, different address, more cluttered. No desk. You pay bills standing at the kitchen counter. Phone in hand. Overhead light. Autopay confirmations scroll past. Autopay confirmations scroll past, one after another. Car. Insurance. Rent. Credit card. The phone says everything is paid. Your body does not feel paid. You set the phone face down on the counter. You are not broke. You are tired. And tired is expensive because tired people do not read documents. Tired people accept defaults. And defaults are priced for the institution, not for you. $339 per month. For 28 years. The math is not complicated. It is just patient. $339 per month is the average difference between what Path A pays and what Path B pays across all their recurring financial obligations. Not one big mistake. Not a gambling loss. Not a failed business. Just the sum of 6 to 8 small default price acceptances running simultaneously every month for decades. $339 per month goes into the model, not as a promise, as a way to see what repeated leakage becomes when time gets involved. Over 40 years, it crosses $890,000. Path B did not lose $890,000. Path B never had it. It leaked out through minimum payments, buried fees, missed matches, car payments, and interest that always looked acceptable in the moment. In $419 car payments for vehicles that depreciated faster than the loan amortized, in insurance premiums never comparison shopped, in credit card interest that the green checkmark said was fine. The system did not steal from Path B. The system offered Path B the same documents it offered Path A. The same portals. The same fields. The same fine print. One person read them. One person did not. Path A, age 50. Morning. Same apartment, upgraded once more. Not luxury, just space. Coffee. A tablet on the table. You are reading something. You are always reading something. The number on the screen is $891,400. You do not feel triumphant. You feel the same way you felt at 22, sitting at that HR portal, reading every field. Not rich. Not special. Just literate. Path B, age 50. Morning. Same tier apartment. Coffee. Phone on the counter. You pick it up. The banking app shows $4,127 in checking. The 401k, the one you were auto-enrolled into and never adjusted, shows $68,000. You set the phone face down on counter. You work just as hard. $339 per month. For 28 years. The difference was never a stock pick. Never a side hustle. Never a windfall. Never luck. Both of you started at the same desk. Same Monday. Same $48,000. The difference was 12 minutes on a Monday in September, reading a benefits portal instead of closing the tab. The screen is still open. The fields are still there. The defaults are still highlighted. Can you read it?